how is it possible that a whole life insurance policy can pay out more than is put into it? How is that even possible? Because I know that's what someone's going to ask.
Well, yeah, I mean, listen, the insurance companies are smart. They're just like banks, right? And people don't think of it like that, but they really house a lot of capital, a lot of cash. And they have actuaries. And so they also know that when they insure you, that you're not going to be dying anytime soon as far as naturally, right? Maybe you are in an auto accident, et cetera, but it's all the law of large numbers. They do, millions and millions of people, and they know exactly when you're going to die as far as technically based on your health, et cetera. So if you decide to get a policy, they know that you're going to, go to the average ages and stuff like that. So they look at the law of large numbers. Then they know that you're going to put in all this extra capital. Therefore, they're getting all this cash, and therefore they can do these different investments. It's all safe investments. It's all that sort of thing. To the point of the tier one income, which is the banks, what they're looking at, legally, they can put up to 35% of their capital, I think it's 35% of their capital into life insurance. Okay, and it's not just specific, it's special type of life insurance and how they create it. What's happening is they're dumping like literally billions of dollars in a year, whether it's Wells Fargo. This is all not private information. You can find this out. And that that up to 35% of their tier one income, which means if there's a run on the bank, they've got this cash that they can pull from, okay? So that's why they are allowed to do that. And so it's just a different way of doing things. And so if you really understand the banks and how they make money, it's not about, they're taking in $1 and loaning out 9. That's true. So they're making margins upon margins. They're leveraging your money, not their money, right? So there's no harm, I guess, in what they're doing, I guess, if that makes sense.
Well, and they're also, and this is something we're thinking about, it's not just the money you put in the bank. There are transaction fees. Yeah. They're making money on every transaction fee as well, which is like a hidden tax. Yeah. You make a payment, they're receiving money from it.
Right.
And that's how that works. Every single time you do that, they're taking that fee, which is huge. And so they've got other ways of making extra cash.
Well, why would you get insurance? It's never really been taught this way. I mean, 15 years ago, I was involved in, a financial planner, et cetera. And someone brought this idea to me, and I didn't, I'm like, I never heard of that before. Why have I not heard of it? There's reasons why. But more importantly, as I started to divulge, understand, and study and get involved, I'm like, this is a game changer because now I can control my money, right? The banks have been doing that. And so, and this, there's a guy in the audience here who owns banks. The thing is when you go to the bank, I can go in if I wanted $10,000, $15,000 and say, listen, I've got to call ahead to even get that because to his point, it's digital. They're not just keeping a lot of cash around. So why is that? They're keeping money in motion. Money in motion is the key to making wealth. And so as far as business owners, you can also Google it. BOLI is bank-owned life insurance. So you can, what I was saying before, you can see the numbers, but also COLI, which is corporate-owned life insurance. Tesla's a prime example. Apple, they all do it. Walmart, many, many years ago, they would put it on every single one of their employees, and then the IRS came in and had to do some changing and stuff like that. But they understand the value of why it's so important to do this. To this point, how if you could put your money into a system, right, that you have total 100% control and access, that you get a guaranteed return rate, let's say 4%, right, 3.5%, 4% of the lifetime. And then you're looking at, you're also dividends that are not guaranteed. However, these companies have been paying out dividends for over 100 plus years. So you've got your dividend, you have your return, your guaranteed interest, but also think of it like this. That money is compounding, compound interest. We've all heard this before. Einstein talks about it being the eighth wonder of the world, but compound interest. What if I've got $100,000 sitting in there that I have access to with, by the way, no restrictions, right? They know I'm good for it. So if I want to borrow against my capital, I'm still getting the guaranteed 4%. I'm still earning the dividends and my money is compounding. It never gets interrupted. Uninterrupted compounding for the next 40, 50 years, as long as I'm alive. And I can literally borrow against the entire amount and still earn 100% as if my money's sitting there because I'm just borrowing from the actual insurance company general fund.
Here's the funny part of the story is I learned about infinite banking 2 years ago. Mm-hmm. But me and my wife, we do our finances together, and she's the one that's typically in charge of that kind of stuff. So the reason you're here on the show is actually because I really want her to do it. And so it took me a while.
Right.
I've spoken to a number of experts. I've drawn it out a few times, but I'm not kidding, guys. I not only thoroughly believe in this, I've done a lot of research. And again, full disclaimer, we haven't done it yet. So, if it's all terrible and this is a complete scam, which I really don't think it is because I've spent 2 years researching it at this point, So I'm telling you, do research.
Yep.
Read the book, How to Be Your Own Banker. Do that. Read that book. Don't just jump in, but read it. Go online and look at whole life insurance policies and Rockefeller. Like Google that phrase. Like, ask AI if you want to. You are going to find out, I assume as I have, that for 2 years of looking into this, this is what they're doing. This is clearly what they're doing. And it doesn't stop you having access to your money. You need to borrow money. You borrow it against yourself. You owe the money to yourself. Your interest you pay back is to yourself. Yeah. And the whole time that's happening, that policy is still growing and increasing. And the life insurance company is safe and secure because they know that when you pass away, or the people you borrow money from, it's all going to get paid back.
100%. I mean, you think of that real quick. I mean, these companies have been in place for 100 plus years, right? They have been paying dividends the whole time. We've had multiple world wars. We've had multiple, stock crashes,
Yep.
et cetera. And I'm still making money. Not all debt is bad, as we know. But what we can do is now we can compound our money. We can utilize the system, right? Therefore, we're keeping more to it, but we're putting into a system that's always going to grow. It's going to grow tax-free, compound forever, and we still have access to it.
Yep.
It's not locked up. There's no rules and regs that says, hey, you can't go buy a fleet of Lamborghinis, or you can't go buy an investment property. Or unlike a 401k, I'm going to hammer a 401k and stuff like that. But by the way, if the government's listening, they know this. Anything they create, you think it's good for you? No. So that's the truth. And even the guy who created the 401k, by the way, has a book out, says why he believes what we're doing with life insurance is the way to do it, not 401k.
Yeah.
It's the 501k, I believe is the book.
Nice. So clearly worth reading. There are a lot of books about this subject if you want to dive deeper. I've spent a lot of time learning this and speaking to different people about it. It's something that we're exploring personally, so I just want to make sure that everyone knows. This is the gentleman that I've found the easiest to talk to about the subject and who's closest to me. So this is the one that I am bringing on board to talk to you guys about it. If this is a new concept, I would absolutely recommend reading some books on the subject first and taking this gentleman's contact information so that if you did want to do it, you could do it yourself. But as Chris will explain, many people attempt to do it and do it wrong, and then end up not being able to use the cash or not being able to be smart about their taxes with it. So,
I would add to that, that's the key, because what I've learned over the years, been doing this a long time. And so I've had to fix a lot of problems or mistakes because folks had thought they were getting involved in a private family banking or infinite banking concept type of policy. And they had the wrong people working with them, and they sold them a product that doesn't work the same. And so we've had to fix that off and on. So that's the key. And also Nelson Nash, late Nelson Nash, he wrote a book called Become Your Own Banker. To me, I think that's the foundation